introduction, Finance Business Partners is a community of finance and accounting professionals who are committed to changing the narrative of the profession. This meet and chat session is one of the many activities that the community undertakes towards ensuring that community members are kept informed and abreast of industry changes. So this evening, we have Mr. Ayandare Oluwatosin, who will be giving us insights on the role of finance in business strategy. Our resource person is a seasoned finance and management accountant. So a seasoned financial and management accountant. He is vast and has sound decision-making abilities. He also has a high problem-solving expertise. He has over 5 years of practical experience in accounting, auditing, taxation, treasury management, and business advisory. So just as I mentioned earlier, he would be giving us insights on the role of finance in business strategy. The session promises to be informative and engaging. Do well to listen attentively and note whatever questions that may arise during the course of the session. After our resource person's presentation, we would have a question and answer session where he would take everyone's question and respond to them. Then if you're joining us for the first time and you would want to further engage with us on our various platforms, the link to our platforms will be shared during the course of the session for anyone who would want to join the community. Hi, Mr. Ayandare, good evening, and thank you for accepting to speak to us this evening.
Mr. Idris, good evening. How are you doing today?
I'm doing fine. How are you doing?
I'm doing great. Good evening, everyone. So, do you want me to continue?
Yes, please, you can go on.
Okay. I want this section to be very engaging, and I want everybody to really participate. I don't mind if you could, unmute your mic, so that let me just share my screen. Just give me a minute to share my screen.
All right, that's fine.
Please let me know when you can see my screen.
Yeah, your screen is visible now.
Okay, great. So, good afternoon, everyone, once again. And I sincerely appreciate the opportunity given to me by the Finance Business Partner. I sincerely appreciate, and I really appreciate again. I'm grateful for the privilege to come and speak to my colleagues, because I checked most of everyone here. We are finance related to an extent. So I check Idris, I check Nimat, if I'm not mistaken, and then some other colleagues of mine. So it's a good time to share knowledge with us, and we are ready to learn together. We are here to learn together. And I just saw my manager joining, my former manager joining, Kudus Balokun, which is aka Iwe Labi. So I also saw him joining now. I sincerely appreciate everyone in the call today. And I want us to be I want this speaking engagement to be very, very collaborative. So, and then let me just continue. So today I'll be speaking on the rules of finance in business strategy. It's very, very pivotal topic today that we are speaking on, and it's good for us to learn. As a finance person, you're not just for bookkeeping, you're not for reporting sake alone, but you have to make some business strategy decisions and to assist the CEO and other board members in making decisions. So currently, I'd like to give a little introduction more of myself. I work at Agade Audis, is an oil and gas company, and upstream, downstream, midstream. So as an accountant, a financial accountant, I have to work through all the company entities. So, and also report directly to the finance controller. So I'll be going through this, and most of these I've passed through them before in my former place of works, and as well my current role. So before I continue, I would like to I would like us to omit our mic. You can see what's on the screen. what would you like to become if you were given the opportunity to change your career path? So I'll start from Mr. Idris, the moderator. Please, what would you like to become if you are given an opportunity to change your career? I know you work in EY currently as a senior taxman, and I'm sure if you are given the opportunity, what would you like to become? Probably back to 10 years ago. So please, the floor is open for you, Mr. Idris Abubakar.
Okay, so if I'm given the opportunity to change my career path, I would most likely go into core finance. Accounting has always been my thing right from the onset. So
Core finance. So which part of core finance? We have treasury, we have corporate finance, we have FP&A, and which aspect of finance?
I would probably say treasury management.
Okay, treasury management. Okay, that was very nice. Nimat, okay here. Please, what would you like to become? I believe this question is very, very close to our hearts. Like someone like me, I want to become a doctor, medical doctor, if I'm given the privilege to go back to 10 years ago, because I would like to save lives. Currently, I'm saving complaints. So, as a finance expert. So, Nimat, what would you like to become? Are you here? Okay, probably she's busy or she can't speak where she is. Luwakemi Bukola, I don't know if you can speak.
Yes, sir. Good afternoon, sir.
Good afternoon.
Yes, sir. If I were given a chance to change my career path, I think currently I'm studying accounting in the University of Ilorin. So if I'm given an opportunity to change my career path, I think I'll go with economics.
Okay, is there any reason for that? Economics.
Let me just say, I just love it, and then the fact that apart from accounting, I also have passion for economics.
Okay, great. Probably if you have any career path in guys that I could have given some advice at the end of this program. So I'm saying, Mr. Toyosi Abayomi, I don't know if you have any insight for us regarding this.
Yeah, good evening. Yeah, so if I were given the opportunities from accounting, I would have loved to switch to cybercrime and fraud analyst. That would have been my major goal, and the reason for that is because I actually wanted to work as an auditor, but I discovered that a lot of people have been going into audit, but this is an opportunity, and I discovered that there's a limited space, most especially in Africans or in Nigeria, in this particular would handle this particular work very well, like investigation or fraudulent analyst, something like that.
That's very nice. Hope you know that there is a professional body for forensic. Hope you're aware of that.
I'm not sure.
Yeah, you can actually search. Probably before we finish this speaking engagement, I'm going to send a link for there's a forensic body that coordinates the fraud activities in Nigeria, just like ICANN. So I'm sorry, someone is getting up. Okay, the files clerk, please, you can speak, please. Yeah, listen up, Jan. Please, you can speak. Okay. So we're using Mr. Balogun Shion Ayodeji. I don't know if you can speak now.
Please, can I speak?
Yes, please. You can.
Okay, so if I were given the opportunity to change my career path, I would love to be an engineer.
Which part of engineering?
Probably petroleum engineering.
Petroleum. Want to come and join us and gas, which is very nice. Very, very nice. Yeah, there are limited number of I'll say female in that category, and I'm sure you make a lot of landmark in that aspect. So it's not too late, actually. It's not too late for any career path. So we'll move forward because of our time constraint. So let's move forward to the introduction aspect. So the introduction, we are all finance to an extent. I won't be defining what's accounting again because I'm sure we all know what's accounting, So we'll be going into the business aspect as a finance expert. So business strategy refers to the plan or course of action that a company adopts to achieve its long-term objective. So, and as well, we should know that there's a difference between objective and goal. As a finance person, goal is for a short period of time, probably 3 months, it can be 1 month, it can be 1 week, and why objectives for a long period of time. So let me just give an example of objective and goal as a finance person. So one of our objectives as a finance person is $1 billion revenue. You understand? $1 billion revenue. That's an objective. It's a long-term objective for an organization. Which a short-term goal should be probably audit. It can be probably treasury management and fixed deposit for per month or per weeks or per year, and also reconciliation, monthly, quarterly reconciliation of revenue pack or cash through bank statement reconciliation and the likes. So as a business expert, you need to understand the fact that your work is not just for accounting alone. You have to understand the business aspect of the organization. I know, Mr. William, you have a lot of things to say about this course because he is always dwelling about as an accountant. We are not just an accountant, we are an entrepreneur. We are coming to sell ourselves to the organization. So this just for us to understand more as we come into the organization. So there's no ridicule as, you're just bookkeeper, to come to this meeting, and at the end of the day, you are the one that will pay vendors, you are the one that will make the analysis of the spend, you are the one that will do the tax planning and the like. So at the end of the day, you are more of a strategic person in an organization. So as we go on this course, I'm sure we'll understand better as we come in as a business strategist in the finance aspect of the organization. So let me just go forward. In addition, please, I'll be sharing this slide at the end of to the moderator, and you will share it to the public at the end of it. We have key finance departments in an organization. Before I go before I deep dive into the finance in strategic decision making, so I'd like us to understand the key finance departments for those that are probably in the first 2 or 3 years of their career, which does not know about the finance aspect, the key finance departments. There are more than this. There are a lot of finance departments, but I just have just 6 here, and I'm going to give an explanation to each of the departments. Mostly I've worked in some of the department, and I'm still working in some of the department. We have the FP&A department, which is the financial planning analysis. These are the departments which are responsible for budgeting, forecast analysis, and the company financial performance. Most organizations, small organization, if I say small, the company that is not, according to Kama, is not up to 20 million revenue in a year, not in 5 years. Finance Act 2021 to define that. Financial planning and analysis. They're responsible for the budgeting, forecast, and analyzing the company financial performance. These are the department which forecast for the organization. If you're working for a small organization, you might be doing everything together, right? But however, like my own organization, you can't do something of such. For the FP&A, you can't do it if you are reporting, but you can do reporting and tax together with part of treasury, not full treasury. So then we move to treasury. We all know what's treasury, right? So treasury deals with cash flow, liquidity. Treasury people, who are the people in treasury department? Most FP&A department people become CFO at the end of the period. You can find them in asset management company. We have in Stanbic IBTC Capital. We have Chapel Hill. We have Cardinal Store and the likes. So we have the treasury department. These are payable guys. They'll know what amount we have in our bank account at a period. Okay, in next 2 weeks, the company will be needing over 20 billion naira for this transactions. So, or a dollar of like $70 million, which ought to be in the account, and they should not use to do an investment. So, these are the treasury department guys that will plan for that. So we have corporate finance. Corporate finance, these are departments which owns the raising of the capital, this going of the company financial status. when I was in my former organization, so we do most of it together. We do everything, accountant to raise capital, accountant to do treasury, accountant to do financial planning and analysis. Mr. Iwilabi likes to head the FP&A team in the budgeting and forecasting team. So we do everything together and all. So corporate finance, raising of capital in my former organization, we raised over $50 million, and that was probably 2 or 3 years ago. And that's a financial accountant job. We do accounting too. Accounting deals with the reporting aspect. We have the AFX. As an accountant, you have to know your debit and credit. That's the beginning. You have to understand your debit and credit account, because that's like, if you follow Pep, she's my friend, Badejo, Perpetual Badejo. If you follow her very well, you see a lot of accounting posting. I remember what she posted recent. I remember when Iwelabi was just explaining this to me probably 3 years ago, that in the way they have been posting salaries and wages in our company is wrong. All this why people have been posting wrong, rubbish posting. This is the right way, in which that was Perpetual posted probably 2 or 3 weeks ago. So these are very, very necessary. The income statement, the balance sheet, and the cash flow is very, very important as an accountant to be able to do all these things. For FP&A, you can go for FMVA. Then I used the platform. There's one platform is free. Though it's $500, but I got the scholarship, and then this is the scholarship I got. Then I've forgotten the name, but I'll remember before the end of this speaking engagement that I used for the FMVA, and which is very, very vital. And I've gone for many trainings of recent regarding FP&A, for forecasting, using of more of like Pro, Excel, and the likes. So we have tax. Now I'm sure every finance guys must know about tax, because a lot of changes is being made day by day. We have the one that just the gazetted of the withholding tax that just came out on the 1st of September, and that is saying that we should start the new withholding tax law in January 1st, 2025. And some other aspects of it, the VAT aspect, tax planning. I'm sure if you're working in any organization now, you just can even get this witness. Many companies now, they are serving them tax audits. And I'm sure if you have like 5 companies and a group that has 5 companies, all the companies will be served tax audits. So I've been to FIS office, the head office, like once within 1 month now, and we have I have like 5 tax audits to that audit itself. I have other desk review too, because I'm one of the tax team in my organization. So you have to be versatile regarding tax, because you don't want your consultant to bobo you. You understand? You don't want them to bobo you at the end of the period. You need to understand the tax law. You can call your friends to explain to you about tax law. Have good friends around. Internal audits. And in tax, we have what they call corporate taxes. The transactional taxes is mostly done by the Treasury Department, the account payable team. But we have the corporate taxes. In the corporate taxes, we have the one that is, we have the tax for the oil and gas, which is the hydrocarbon tax. In hydrocarbon tax, you are going to also do the CIT, and hydrocarbon tax is backed by PIA. You have to understand what's PIA before you can even do that. So obviously, I just came up with a new template for my organization for the tax, corporate tax, hydrocarbon tax. And in hydrocarbon tax, most accountants went for the VAT taxes. I did the VAT tax as well, which was very nice, and I was approved for this Q3. So we have internal audits. In my company, we have internal audits. In my company, we have all these departments separately to an extent. We have internal audits. These are people that will checkmate whatever the accounting system will check the process, the full process of the organization. They'll help with the compliance aspects too of the organization. So we have investor relation, which is not here. We have investor relation department, which is part of finance too. So people are saying that I want to go to treasury. If you come into industry, I'm sure most people are in probably in consulting firm, or if you come to industry, you can actually change. And when you go into treasury, you can do some important courses, probably CFA. You can just enroll for a CFA from now onward, so that you can start preparing ahead, and that can lead to a change of your career path, or try your best to get into probably a asset management company such as Stanbic IBTC or Chopit you know, there are other big other ones, but these are the biggest in the industry as of now. So we have the risk management department, we have the payroll department. You know, in a big organization like Julius Berger, they have a full payroll department. You know, as a finance expert, you have to understand the payroll. I know I was taught payroll by Mr. Abelabi. Kudos to him. So he taught me how to do payroll, full payroll. We did a full template according to Finance Act 2021 in my organization, my former organization. But now I don't do that payroll again. The fact that we have SAP, which I will speak about SAP and other system now. We have SAP system that do payroll, and is mostly done by the HR department in my organization. We have the compliance. There are a lot of compliance aspects. We have the ITF, we have the tax. You know, they'll call the tax team. How far we meet up with this timeline? We have the NHF. We have many other compliance. These are the people that say that, okay, we have to meet with timeline. We have the statutory payment and the like. So there are a lot of statutory payments to be made as an organization. So it depends on your organization. You have to understand the statutory compliance aspect of the organization, because it differs from company to company. So that's just that for the key finance department. So before we move to the biggest ones, so let's just go to this. So, and again, now this will be more of everybody speaking again. So I don't know, and which animal would you best describe yourself? I don't know if Bashir, Isaac, or Pemi would like to speak on this. Which animal would you best describe yourself?
Okay. Thank you, Dave.
What do you say, please?
Okay, so I'll go for the owl.
Okay.
Is it between the owl and the hands?
It's not much you must pick from here. You can, if you have another one, probably have giraffe or anything. This is just an example, so you can pick from anyone you want.
Okay. Yeah, the owl is fine.
Okay. You mean the O?
Yeah, the O.
Okay. Okay, that means you value wisdom and knowledge. I believe that's why you are here today.
Yeah, very well.
Yeah, no problem. I believe you get value for your time. Mr. Kudus Balogun.
Well, for me, I think I will be still a lion, right? And the reason is not because of anything, but because of the fearless nature of the lion, and that courageous nature to face any form of predators and also go after its prey.
Thanks so much, sir. So, and Mr. Kudus Balogun, you CEO of Iwilabi Consulting, so you can check him out on LinkedIn and follow him up. So, Oluwadamilola Adeyeri.
Okay, sir. I think I would go for an ant.
Okay, why?
I'm not joking, and I try to collaborate in environments.
Okay. Bukola. Oluwakemi Bukola.
Yes, sir.
Yeah, please can you
I think I'll go for the owl. Yes, because I value wisdom. I tend to learn new things. I'm a very inquisitive person. I love gaining knowledge from different places or any activities. So I'll go for the owl.
Okay, let's move. Okay. So now I'm going to deep dive. So So key decision made by finance professionals that impact a company business strategy. As I've said, we're not just an accountant, we're not just ordinary finance experts. We are in the company to help them in decision making, to ensure that they put the square peg in the square hole, not for only just HR, but finance people to do that. So finance play a critical role in shaping and supporting business strategy by guiding decision process. Here are the breakdown. So before I go into the breakdown, so one, tax planning. It's very, very important to plan your tax now, as we are having a lot of. So the other time I spoke about HST tax, there is no how a company making revenue without paying tax now based on the HST tax and the PIA law. You know, it gives you a restricted cap of 65% of your revenue for your cost. So the implication is that the remaining 35% will be taxed, apart from you moving your statutory regulations such as royalties, NERS fee, and public production allowance, which is like 4% of your production. You understand? Multiplied by your by the price per barrel of the crude for that period. You know, you are going to pay tax. So you need to plan your tax as at now. So if you're a tax expert, you need to plan, help the organization to plan, and then okay, this is the best route for payee. You know that someone that is earning more than 100 million will be paying like 25% going forward next year. So there's a lot of things going on now. Withholding tax, if you don't have TIN number, you have to pay double taxes. You know, and this will start happening from January 1st, 2025. So these are important aspects of tax planning that, you know, you have to let your organization know that this is going on. For your vendors, you have to let your vendor know that, guys, you guys need to provide your TIN numbers. For those that have clients that does not have TIN number, this is the best time for you to say, okay, madam, sir, please let me agree with your TIN number so that you won't pay double tax. Let them know the implications of whatever they're doing. When they're paying bonus, tell them to move withholding tax or payee, as the case may be. You know, if it's for contract staff, that will be withholding tax. And then if it's full staff, you know, we know it is payee. And there's some other tax aspects, tax planning, you know, your capital allowance. If for capital allowance, you have to read PIA very well. You know, there's a lot of new laws going on. You know, if you are on in oil and gas, you have unrestricted capital allowance. You know, these are important aspects to know if that for the management to decide probably should invest more in the capex of the organization. These are very, very important aspects because, you know, there's unrestricted capital allowance. That means if you have more revenue, if the management invests in the capex, you can actually not pay any tax. You can just pay minimum tax at the end of the period, right? Manufacturing company too, agricultural company too. These are very important for the tax planning of the organization. This is according to Finance Act 2023. So you have to study Finance Act, like you have to study it because a new one will be out every good year, and as well as understanding the PIA and other tax related to your own field, to your company, you know. So as a consultant, you have to understand all aspects of tax. You know, you may be called upon for probably oil and gas or something different, or agriculture. You have to understand the tax implication so as to safeguard your clients from not paying too much tax or penalties. Second, you have cost management. You know, I remember, so cost management, that is very dicey. And, you know, I won't want anyone as an accountant to always reduce staff costs, staff salary because they want to cut costs. That's not good enough as an accountant. There's a lot of case study about it, a lot of Harvard case study about it. You know, there's a company, Toy Us and R, made that mistake as well. They want to reduce costs. They are reducing staff costs. You don't reduce staff costs. You don't reduce, I don't know, in any organization, you don't reduce staff costs because the morale of the staff will be low. There will be low productivity. You may think that they are making a lot of progress. Not lie. It's just boju boju. They are not making any progress. So in anything you do, please don't reduce staff costs. It's very, very important. Appreciate staff. I understand what I'm saying. You understand? It's very, very important, especially in this trying time, that there's a lot of inflation. You know, if you are reporting in dollars now, if you check management account, if you check people reporting, you know, you can't take people reporting. Q3 report of some organization is out already. PLC organization. My company wants to be out soon, probably this week. You know, you should look at it very critically. You see that most organizations are gaining based on the fact that we have our exchange is our exchange is going on higher, like dollar to naira. You know, conversion is going higher. That's 1.7 to $1. And on that note, the staff cost is reducing. You understand? Q3 by Q3. You can check it up. You can open supply. I think their own is out already. So you can check that out, you know. So cost management, you have to check some critical aspects. You know, cost management, check your taxes. Don't pay excess taxes. You know, when you know that your client is not revenue is not 20 million based on the prior year reports, you don't need to pay withholding tax now. You tell, oh, this is not, you can't even withhold that for my money, you know. Costs, some cost that is not important, you know. Some PR that is not important, you have to move that. In advertisement, you know, if you are working in some organized like tech company, check the advertisement. Is this really true, or they're just increasing the costs? You know, you have to do some investigation. You understand, regarding cost management. You know, letting them to put money in the right places. You know, you have to guide them through. You know, you can't say that and because we want people to know our organization is a big company, let's go and bring someone from UK who might be heading the HR department. What's need for that? When we have someone in Nigeria that can be any error and save the company dollar, you get. So these are very, very important, that you have to guide the human resource. You have to guide the technical team. You know, don't go and say that you have to bring vendor from abroad so that, you know, so that you can know we are doing well. Our vendor is not from only Nigeria. No, is that important? You have to ask them important question. Is this important? Should we have to have someone from abroad? If no, can we have someone from Nigeria? If yes, okay, let's go. Let's check the prices. You know, don't just collect one vendor invoice or pro forma invoice and say that this only, get like 4 and check the pricing, check the quality of what they will do, and check what they have done before. You know, I'm not saying you should reduce costs, you know, but just to ensure that the cost is minimum to an extent, you know. So we have investment decision. Mostly this is made by management team. This is made by managers. However, your input, because you are close to the numbers than your managers, you know, you are close to the number than your managers. For investment decision, you can actually advise, you know, you can advise, save dollar, pay in error. If you are reporting in dollars, probably you did your taxes in dollars. You know, you did your corporate tax in dollar and you also pay dollar. You can write to the FIRS team. We want to pay in error. I'm sure they'll count you. Very, very sure. Even and that way you have said it before. Even before it came on board, there are certain many companies paying in error. You understand? These are investment decisions that will help you safeguard the cost as well. You know, doing your due diligence as a finance expert, thinking this company, okay, renewable energy company, should we invest in them or should we invest? Doing your forecast right, get the relevant cost right, you know, and telling the CEO, this is the best decision we should make. We should not buy. We can go and lease for us to go and buy. You know, these are very, very important decisions, and you're the one that will safeguard. And sending in a formal way, don't just use your mouth to say it. Say it in a formal way. Sending an email is very, very important. You know, so as to show proof that, hey, hello, I'm giving this, I'm giving the advice. If you like to follow, try to follow, and you don't like to follow, this has been put into book in case of future references. And don't ever look down at yourself that this is the only company I can work, right? You know, you don't know your capability till you get some other aspect of other organization, and that's when you see more of yourself. So capital allocation decision, as I've said, putting the square point in the square hole. These are finance decision, capital allocation decision, which more explain the investment decision. You know, capital allocation deal with a lot of financing. in decision making, mostly for big organization, and as well to also impact on the tax, as I've said. And all these decisions impact each other. Investment, when you invest more, you get more, you pay more taxes. Dividend policy. Every PLC organization have their own dividend policy. You can actually let them know that, okay, we can pay this amount at this time, because if you don't pay dividends to your shareholder, if you are on NGX, your share price will be getting low and they will be losing a lot of money. The company will be losing value as well. You know, you have to advise rightly, but you don't have to advise on the fact that the company will be losing a lot of resources, not to borrow money to pay dividend. These are very, very important decisions for dividend policy. You know, you have to check. You have to ensure that the company is doing well, reducing any cost that is important to be removed, and then paying the dividends to your shareholder. We have performance measurement and KPI settings. I remember vividly when Mr. Iwelabi was doing that for my organization. Then he was doing for my former organization, because KPI was just new to everybody. You know, everybody in finance must have a KPI. Very, very important. Key performance indicator. As an accountant, what's the important aspect? Okay, audit. Audit must start now, so as to meet up to February. So you can finish your audit by February 2025 and sign and get it signed. Then you can publish to the public. You know, these are very, very important. Okay, I must finish my reporting. Now we are almost end of the month. This 27, you have to start your bank consolidation. You know, your month end management account. You have to start your taxes, those that are going to do with withholding tax and VAT. You have to start like putting your schedule together and the likes, your interest income, amortized interest income. You have to check those investment that is almost maturing and the likes. These are very, very important for you to know, okay, there are key things that I have to do every month, you know, so as to ensure that, okay, if the man is making decision to probably lay off some stuff, say, oh, and you should have it down. And whatever you are doing, you have to have it down as well as a finance person. You have to have it down that, okay, I did this for the organization. I did this. I saved this cost. I saved this cost. You know, it's very, very important. Capital structure optimization. I'm sorry for the newbies in finance. I know this, at the end of the day, in the next 5 to 10 years, I'm sure you understand all these aspects, these key aspects that I'm mentioning. I'm sure you participate in some of the decision making at the end of the next 3 to 5 years. If you're just 1 year or 2 years in Europe, you may not too much understand this, but I'm sure as the year goes on, you get yourself familiar with all this capital structure optimization. This is very, very important as well for a finance person. It's very, very important. Capital structure optimization. Very, very important. Should we go and borrow money and then they should become a shareholder or should take a debt? It's very, very important. This also will help you in your tax. You know, everything you are doing now, it will impact in your tax. There's nothing you want to do as a finance person that you don't understand tax. Capital structure. Why does people like to take debts? Because of it will reduce the tax liability that corporate taxes. Because your interest income is allowable to an extent according to the tax law, etc. So it's very important for you to know the capital structure of the organization, and you should know the organization that you are into. You understand? Like oil and gas now is very, very good to an extent. You know, and this will make other other parties to say, okay, other stakeholders, you know, the public, we have the analysts to know, oh, this company is very good as well. You know, they are very, very good. They manage their debt well. They have been paying their interest, and they have not faulted in any way. We still have other ones which I did not mention. Liquidity management. We have risk management. We have merger and acquisition decisions. I'm sure a lot of decisions. So I don't want to bore us with that. So moving to the next aspect, we have the finance strategy in different business stages. I've mentioned startup previously, and I've mentioned growth stage organization. So let me move forward to this startup stage. As a finance person, if you're working in a startup stage, you know, your own aspects as a finance expert is to work on their cash flow. You know, the characteristics of a startup is a limited cash flow and revenue, high level of uncertainty and risk. I remember in my former organization, every month, because people must resign, there's a lot of uncertainty in that organization, and that's how all startup works. Uncertainty, dependence on external financing. I said 3 years ago we get some fund, though they're making good revenue already to an extent. They rely more on equity, angel investor, and venture capital. What are the key strategies for a startup as an accountant? Securing capital. We remember then when we secured the capital of $15 million, we saw the CEO mail mention his finance guy's name because we participated in the strategy, the business strategies of the organization, of raising the fund for all the whole team. Understand? We have securing fund, that's most important. Cost management. Putting the square point in the square hole. Is this person important in the organization? If no, please take him out. Yeah, but you have to say it in a good manner. You have to give person time, training before you take the person out. Right? So cash flow management. If you're working in a startup, cash flow management is very important. Then my former organization is more of startup organization, so that's why I'm just laughing. I remember something. It's cash flow management. Mostly it's always negative. But they want to make a positive cash flow. There's a period for a positive cash flow, and it's likely most after 5 years of the organization operation. That's the most startups would do have a positive. But in the first 2 years, no. And that's just it. Market penetration strategy. Financial planning should support aggressive customer acquisition and product development. Allocating resources to marketing and research and development. I can get that. Like mostly 30% of the expense in a startup organization is going into marketing, advertisement, flexible budgeting. That are key strategies for a finance person to make. You have to be conscious of working with the advertisement team, digital marketing team, and sales team for the organization. If you're working in a startup organization, then we move to growth stage organization. An example of a startup organization, if I forget, we have a lot of startup organization. We have OP, we have ULESSON, we have MIFA, we have Iwelabi, we have a lot of startup companies in Nigeria currently. And I pray by God's grace I will move higher in Jesus' name. We have growth stage, scaling the business and expanding market reach. So these are the companies which have spent like probably 3 to 5 years already in existence. You have they're characterized as rapid revenue growth, but potential high expense, that's just normal for an organization that is just growing because they will spend a lot of money in their research and advertisement. Averagely, a startup company spend averagely of like 90 million to 100 million for their research per month. So it depends on the organization, though. It's a growth stage organization, so focus on scalability and efficiency. The efficiency is due with quantity. You must not spend too much time on something that is not really important. As a finance person, you have to scaling operation, invest in scaling up operation. You have to let the technical, the CTO, because I don't know how it works in other organizations. The CTO, this is the production we have to make to get this revenue. We have to produce using your forecast. Okay, these are what we need to produce for this period. We need to produce probably like 4 million barrel for the year, probably 14K per day. Understand? So it depends, it depends on probably the approach, because you have to work with everyone in the organization for you to make a good strategy. You have to understand every business, every department, from sales to commercial to production to marketing to digital to data analysts to any other department. You have to understand what all they do so as to make a good impact. So for a data analyst, you can't tell the guy that, oh, don't use just normal Google Sheets, because on the file you lose some of your data at the end of the day. It may be very slow. Okay, let's go into Power BI. You understand? Oh, let's use Oracle. And there are some other aspects of it too. So as to ensure that all data are together and they're not mixed up. We have profitability management, and all. So let's go into the mature stage organization. What are the characteristics? Stable cash flow and profitability, slower revenue growth, but more predictable, greater focus on efficiency and maximum return. If you look at Shell financial reporting today, you see that the revenue is not really moving to an extent. Just like, if you compare revenue in the startup and the revenue, the way, like the percentage increase, if you look at startup, you see percentage of like 200%, 300%, but that can't go the same with Shell as well. You can just 30%. 30% can be probably $140 million or $140 billion. So it depends. $140 billion, and last year we make $100 billion. That's the difference. That's so close, right? But a startup will say, okay, maybe they make 100 million this year. Next year they make 200 million. That's 100% increase. And that's one of the mature stage. We have slower revenue growth, more predictable, greater focus on efficiency and maximizing returns. As an accountant in this type of organization, you have to ensure the dividend policy have to be right, the debt management, because in the mature organization, they already have debt embedded in them. Investment in innovation, most of oil and gas now are living, they want to go into renewable energy, green life and the likes. So, investment in innovation, okay, as a finance expert, they're bringing it to your table that, want to make decision on buying this aspect of the aspect, so as to focus in innovation and where people are moving to now. If you look at previously, we have most companies, if you Oando production, exploring and production, E&P, but now most of them are not called E&P again, they're not called energy. Oando Energy Company, Shell Energy Company, Chevron Energy, the other aspect of the organization, Matrix Energy, Matrix Gas, these are name changes, these are innovation, which a finance expert must understand. Maintaining market share, which is one of the strategy, key strategy for so now that most companies that are moving probably from you're going to go on NGX, my company just moved into NGX, so you can buy our shares as well. So company moving to a new aspect, maintaining market share, okay, these are our aspects. We are into oil and gas. Okay, we know our customer. We don't need customer. We don't need money. Okay, what are they going to do? How can we increase our market share? Okay, let's move into more of refinery. Let's move into this, into a deal. Let's move to what people want more. So, as a finance person, you have to ensure that you maintain good market share. You can't say, I can't leave it to the head of advertisement and marketing. You can't leave it to the sales department. You have to be there to make that decision with them. So we have the decline and the restructuring organization. Mostly this is done by Big Four. It's done by Big Four. They can't just bring an accountant. But however, if you find yourself in this aspect of the organization, decline and restructuring organization, this has happened before. Decline in revenue and market share. These are characteristics: increased operational inefficiency and potential cash flow issues. Need for cutting costs, restructuring and liquidation. In this type of organization, you see more of cutting costs, laying off staff, especially this period. If you are reporting your revenue in dollars, I'm sure if your revenue is not in dollars, if it's in naira, if 80% is in naira, I'm sure you're making like what you make last year, because after last year, the conversion rate was just 450. Now it's 1.7. So you have to make times 4 of what you make for you to even get to that stage of the revenue you made last year. So these are very important. Like most accountants will be doing this time around, cutting costs and streamlining. Asset management. The company wants to sell assets based on for them to pay salaries. You focusing, in this aspect, you have to be focused on business strategy. You have to recheck. Can we change our payment to dollars? Can we start earning dollars? How can we pitch our company to company outside there? These are very, very, very important aspects of finance. okay, we're not making a lot of money now. Can we push our company as a consulting company in Nigeria? How can we make other company use our services? How can we make more market share? How can people know more about our company? Should we just do more of it so people can start seeing our pop-up? Oh, this is the company I want to. I'm not saying now. Like, there's some things I do before. Like, sometimes if I see this stuff like 20 times, I can say, okay, let me just buy their stuff. Let me just check out their stuff, and from there they can buy me out. But however, you have to check their criteria very well, because as an accountant, you can't just be only for figures. You have to ensure that everything that's going on in the organization, you are part of it. But that does not mean you should not focus on most important, your financial reporting, your treasury management, your cash flow, your tax plan and like. But you have to be everywhere in the organization. You have to ensure that you are participating in most of the business strategy key decision that is being made. Because at the end of the day, it will fall at your door or on your table. So now let's move to these tools commonly used to formulate and execute business strategy. As a finance expert, there are tools that most of us use and that we use to make some decisions. One is financial statement analysis. This is number one in your whole wide world. Before you make an investment to an organization, you have to check their profitability, liquidity, solvency ratio. You have to do that ratio so as to get, are they really making profits? Is their performance okay for the past 5 years? Or are they doctoring their books? Like someone that I said they want to work in forensic, most organizations do a lot of window dressing of accounts. A lot of window dressing. And which forensic guys are very, very important. I'm sure KPMG has forensic department as well. So that's very, very important for you to make your key decision. You have to check the company financial statement. So most PLC companies, they are embedded and in accordance probably to NGS law that you have to display your financial statements. That's why in every quarter you only see some companies unaudited management accounts or financial reporting, probably condensed or full. You understand? Condensed is probably just, you won't see all the old books, like the note of the accounts, it's just condensed. That's why it's called condensed financial statement for Q1, Q2, Q3. But at the end of the by December, by January, from January, you start seeing full year. So financial statement. So to assess the financial health and performance of the company by analyzing the profits, liquid, and the solvency ratio. So profitability ratio, you use your net profits margin, you use your net profit margin, and you use other aspects. We have asset ratio, we have debt ratio, we have ROI, return on investments. There are a lot of ratios that can be used to checkmate this. So we have the budget and forecasting tools. So before you invest, before they invest, probably your company to invest in a company, you have to check the forecast. Is this company going to make revenue, or will they make profit in the next 5 years? You have to make your forecast right, allocating so as to allocate your resources and predict the future. I said earlier that the budget and forecast is being done by the FP&A team of the organization. But however, if you don't have FP&A team, you can totally do it and seek advice. And there's some people that consult. Consulting firm does that. Iwilabi does that too. His consulting firm does that. So you can actually ask him if you want 1 or 2 for your budget and forecast, because we are going to next year. You have to have forecasted and working on your budget, because this is almost October, November. By December, you have to have approved your budget for 2025, which are very, very important. We have the ERP system. This speak of more of now the software which is being used by a financial accountant. We have a lot of financial software, which is, we have Zoho, We have Zero, SERO. We have SAP. My company is SAP. We have Oracle. We have Microsoft Dynamics and a lot of system which an accountant used for making decision. It's very important. SAP suffices in all aspects. We can use for production, we can use for commercial, we can use for finance, we can use for human resource, and a lot of companies use SAP. My company uses SAP, and they're cheap. They're also cheap. I won't say cheap again, I will say affordable software. Zoho is affordable. I think 4K per month and probably 40K per year. So it's very affordable. So ERP system for you. So working in a startup company, your books need to be right. You need to, and your statutory compliance needs to be right, because for you to this fund, if you are doing due diligence and they see some mistakes or your books is not correct, you're not able to get the fund. It's very, very important for you to start using a ERP system. There are some very affordable ones. You can see some more at 2,000. There are new ones coming out now, 2,000 and all. So it's good for you to get that right at the beginning. Don't wait till and let me start operating for the next 3 years and all. We have business intelligence and analytics tools. With that, we have Power BI. We have SQ. So a lot of tabulars and the likes. So for the business, and it's mostly used by the data analyst team. And you can actually learn it too as a finance expert. If you want, there's some graphics that Ewelabi does using the Power BI for. So it's very, very important for you now to use some of these tools. Even when Chevron financial analyst and equipment is going on, one of the questions they ask is Power BI. Can you use Power BI? These are very, very important tools for your financial accountants and for your finance experts that want to make some decision for business strategy. Like I'm sure in Chevron now, if you can use Power BI, you may not be able to make some decisions, right? And that will not allow you to help in the business strategy of the organization. And it's very, very important as a finance expert that you need to understand all these tools. Just a little. It's not too much, just a little. So, importance of finance in strategic decision making. I've said a lot of importance already. I'm very sure I've said a lot of it. I just take it because of time. Resources allocation, forecast and planning. Cost control. I've spoken about cost control earlier. Sustainability and growth. This is a new one. This is one of the new beasts in finance. Sustainability. Don't go and pay dividend when you know that your company can't survive in the next 2 years if you pay this dividend. These are very, very important. Sustainability. Paying taxes. If you don't pay your taxes, the government may come and lock your organization, and that's will hold on production. Your revenue will go down. Maintenance. You need to do your maintenance earlier for sustainability. For you to sustain the organization. If you don't do your maintenance, I'm sure one day the engine, as a finance person, you say, I'm not concerned with the machine. You have to check the repair and maintenance. Are they really doing repair and maintenance? If it's getting lower, you call the CTO or the person in charge. I'm seeing that repairs and maintenance are getting low. What's up? When are they doing maintenance for all the machine? Because that will not be able to achieve your key result of your revenue. Because you have already made a forecast in a period that, okay, you want to achieve a revenue of probably 20 billion this year, right? So if the machine goes down, you can't meet that revenue, right? So on that note, you have to be concerned about all other departments in the organization. Advertisement and marketing, you have to be concerned. Our product getting reached to those that needs it. What strategy can we do more? Do you want us to go physically, or we go more of online? Or we should go to the market to advertise in the presence of all the market women, or they need dancing, or we need to do a lot of big promotion. So these are very, very important as an accountant, because if you watch BBN very well, Big Brother Nigeria, you see Deloitte is the auditor. So, and as a finance person, don't shy away from probably new things. Deloitte is the auditor, always counting the votes of people and people are saying BBN, they're making a lot of millions. I'm sure they don't now. Deloitte charging dollars too. So how can you increase your revenue as a finance person? You can't just sit down there and look at things. You have to look at how can we sustain? sustain the system. So these are very, very important too. So with this, I believe I'm done to an extent, and I have a lot of experts in the house too that will give more of an insight to this. So thank you so much, everybody, for listening attentively to me. And still appreciate it. Please, do you have any question? I'm going to take a question, and I think I have many of my senior colleagues in the house, so that I can answer the question. If I can answer the question, please, you can unmute your mic and ask the question. Thank you so much.
Okay. Thank you, Ayandare, for the presentation so far. So in case anyone has a question, you can just raise your hands, then you'll be called upon to ask your question. Then my own question for you is this whole concept of business strategy, at what point is finance really necessary? Is it at the point where the strategy is to be set, or at the implementation phase?
Thank you for the question. So from the outset, finance is very important from the outset, because they may have made, if as a finance expert, if with the implementation, there will be a lot of issues that will happen. So let me give you an example. Okay, let me give you an example. Probably a company wants to dive into because I mean oil and gas. Mostly what I'll be saying is more of renewable. Probably want to more of wells and the likes. So probably a company want to drill a well. Want to drill a well so as to remove probably oil or gas, and as a finance person, you have to be there. You can't be waiting till don't start drilling and start paying vendors. You have to say, please, can I see the feasibility study of the landmark? What's the percentage of oil? What's the percentage of gas? Because then you have to know that your revenue you get from this is it enough? The revenue will cover the costs of drilling that well, because you're not spending 10 naira, you're spending millions of dollars to drill a well, right? How many volume of oil will I get? Because your home will be more of oil or less gas, right? Because you're not getting a lot of money from gas. Gas is $2 per MMBTU, right? So and your oil per barrel is like $80 per barrel, and you know that at the end of the day you're making millions of dollars in oil. So if the feasibility study is showing of more of gas, you understand? And that's when that's at the beginning of the initial stage of the talking of how can we get this? Can we get this done? We want to drill a well. You ask them for the feasibility study. When you check, you say, this is not viable. You let them know at the beginning. Tell the CTO that's in charge, or the technical or the lead engineer, this is not viable. This is more of gas. And gas, if you be getting 2 million MM on this gas, this is our revenue. And the cost will be incurring for this drilling of this well is this. So it's not viable. The revenue we're making is not viable. And on this again, we're going to pay tax on this. When you do your reporting, you're focused on it, it's not viable. Then you think, don't do that well. It's not because implementation stage is when you start paying vendors. But at the stage of making the decision, in the beginning is when, please, let's see the feasibility study first. Let the economics department do the feasibility study. We get the feasibility study, get to the finance, the CFO and the FC get it. Start working on it. Let's do a focus on this. What do we have more of oil? This is viable. Let's work on it. We'll be getting more fund. But if you wait that, when they start drilling, my dear, they could have make a lot of wrong decision already before you know, and you be the one sanctioned for that as a finance, because you will not have a lot of funds to pay salary. You go on debt, and the company will not able to get hold of their debtors. They pay their debtors, and at the end the company collapse. You lose your job. So that's just it. Do you understand?
Thank you. Yeah, I do. Toyosi, please go ahead with your question.
Thank you so much, Ayandare. Thank you. The engagement has been so interactive and awesome. Thank you. My question is, as a startup, if, for instance, you work with a startup and you discover that from in the year one, from January to date, your revenue is about 1.2 billion naira, right? But at your bottom line, you now discover that you are now having a loss a massive loss of about 1.5 billion naira. And when you now track it down, you discover that it's as a result of all these exchange differences. Because most of the time we have these capital importations that we engage in, and the company is being funded by shareholders, and basically they are foreign investors. But yet the investors were questioning the fact that why can we have a revenue about 1.2 billion, but we are at the bottom line, we're now having about 1.5. So we need to tell them that it's as a result of forex, but yet they were mounting pressure on finance that we guys should do something about, and this thing is beyond our control. It's not something that we can actually control about. So what advice or what can you give? Though the company is a startup, and the truth of the matter is the level of debt, and I hear you when you said that if it is reasonable for a company to be financed by debt than the equity. So from the tax view and from finance view, what advice can you give such an organization? Though the organization is a startup, so what advice can you give us? Thank you.
Okay, thank you for the question. I'll respond a little, and I'll give Mr. Kudus Balogun the platform to answer more. So I want to ask some questions so as to get a more of clarity. So you have a revenue of 1.2 billion, and you have a loss. Is it a loss of 1.5 billion?
It's a loss.
And a loss. Yes. Okay, loss. Is it caused by exchange loss?
Basically, it's actually caused. In fact, let me just say 70% is caused by exchange loss.
Okay, exchange loss. That's fine. Exchange loss is caused by exchange loss. Cool. And there are two types of exchange loss. We have realized exchange loss and we have unrealized exchange loss.
Actually, it's the net. It's the net that we report.
Okay, the net that is being reported. That's nice. So on that note, is it reported in dollar or it's reported in naira?
All our the presentation is in naira, not in dollars.
Presentation is in naira. So on that note, when you have a loss of 1.5, it's very dicey. It's very dicey.
The tax implication,
so the tax implication is a good one for
finance implications. I just want to know the finance and the tax implication, because it is running through. We are running through a loss.
Yeah,
the shareholders are worried. Yeah, and we need to convince them in such a way that at least they will understand the fact that they of course they are aware that it's a startup, but they were just worried that as it is, things can go away if you keep on going, and this forex is something we don't have control about. So that's the dilemma.
Yeah. Let me just ask you something. I know that something like have caused the exchange loss that soon. So is it depreciation that's causing it? Is your depreciation in dollars?
No. It's actually not in dollar. In fact, our raw materials are imported. They are basically imported. Our major raw materials are basically imported. So I believe that's what actually causes and if you are paying, you have to pay in USD.
So I don't know how your cost of sales now come into exchange loss. Because what really causes exchange loss now is the valuation. Now, and I'm not seeing. I'm very surprised for you saying this question, right? Because I'm not seeing, looking at it in my head, I'm not seeing your reporting. What costs exchange loss most is valuation. And now your reporting is going in dollars, is in naira. Understand? And that should just directly affect the direct cost. That should be direct cost, which ought to be having an heading on your, probably in your COGS, because it is a material. And that should not be in your OPEX. So I'm surprised that you now have a loss at the end of the period. But it's fine, One, you have to check your revenue. You have to check your cost itself, and if you're actually making your selling price, if your selling price is right. Before Mr. Kudus will talk about on the explain to your shareholder, right? Check your selling price. If your selling price is high, when your cost price is high and your selling price is just lower than selling price, you haven't lost ordinarily. So you have to recheck because you can't use last year because now exchange and difference between last year exchange and this year exchange is more than probably 500%. This is not even up to 800% already. So you can't use last year pricing. Sales price is different from cost price. You have to do cost price. You have to do what they call product costing. As an accountant, you have to do product costing so as not to continue your loss because that loss is extremely high. Because when you're not reporting dollars. If it was in dollars, I can understand that. Okay, probably your liabilities. You understand? And I can understand your liabilities. For your exchange dollars coming now at you reporting error is very worrisome too. Very, very worrisome. Mr. Kudus, please.
Yeah, thank you very much, Maiwa. I think just like Maiwa said, right, there is a need for a bit of clarification to what's going on a little bit. So number one thing is that, like you said, if you are saying that your major USD cost is your direct cost in terms of your cost of sales, then technically you have to factor it in your selling price. So I'll ask a question. Do you currently have a gross loss? Because I want to believe that will have been factored in your selling price. So do you have a gross loss in your book?
No, not at all. We don't have gross loss. It's
exactly.
Just the bottom line.
So technically, if you don't have a gross loss, so the next question will be, if you don't have a gross loss, then the next question will be the funding you are getting from your investors. Are those funding loans to you guys or their equity?
Actually, they are loans. The CCI will receive.
Exactly. Cool. So once it is confirmed that they are loan, then most likely, right, where your problem of exchange loss is coming from is from that loan, right? And how do I mean? Because this is an accounts payable or let's say a liability kind of an issue, which according to IAS 21, which deals with effect of exchange rate, right, or foreign currency, what you have is on loan note, which is a monetary item. So technically, at every reporting period, you need to convert or you need to retranslate to the current with the current rate. So if you have gotten a loan from last year, for example, where the loan exchange rate, you got a USD loan and then the exchange rate then was 500. Now, you know that if you haven't repaid that loan, right now as we speak, if you still have the same loan in your book, let's say you have $1,000 that you got as a loan last year, right? That would be 500,000 naira in your book, kind of. So if you have to pay that loan as at that time, you probably have to pay 500,000 naira. But now, the same $1,000, and you still have it in your book, and probably you have even gotten more funding or more financing. So if you still have the same $1,000 in your book, and exchange rate is about 1,700, that's 1.7 million naira that you are having as expenses, one way or the other, most especially on the interest part of things, away from the loan, away from the what's it called, payable balance now. And then you know that when you also have that payable balance, if you are translating the excess of the previous position versus current position, will also go to your exchange difference, which is also an expense. So all of these expenses are going to definitely increase your expense position. But in terms of how do you manage it with your stakeholders, right? Number one thing is when I was dealing with this kind of situation, when the exchange rate issue first occurred, what I first did was to send an email to the senior management team in the organization, letting them know that if this exchange rate goes like this, this is the implication on our business, and then show them some trends. So if you want to manage stakeholders' expectation, and then for them and everybody to be able to see that there is nothing finance can do, then you probably might need to show them some trend in terms of, okay, when we were here and exchange rate was here, right? This is it. Let's now assume that the same exchange rate remains constant this will have been our actual position. But because the exchange rate is at this rate, then there is nothing we can do. Other things that you can do will now be to start doing what Mayowa has said in terms of, in advising the company on some other forms of investment options. So if you have excess cash at hand or you have some free cash, then you probably might want to invest in some short-term securities so as to get some little profits in order to cushion that effect. And it might also be high time to also consider whether or not you are able to start earning in dollars one way or the other to also reduce that kind of position. And another thing is also that if you always convert your money, which I don't think that is the case, but your USD, best way to always use it at this point will be that you should only take what you need at every point in time for working capital. And how do I mean? If you have gotten $100,000 right now, right, at the beginning of the year, the idea is that you do not convert the $100,000. You only convert maybe $5,000 that you need in January, right? So technically, that $100,000, now you have $95,000. If exchange rate increase, then you also have a position that is in dollars that will also help you with exchange gain, right? Because if you are converting that $95,000 at maybe 1,700 now as against 500 or 700, that means you are also seeing profit or you are also seeing exchange gain, and that should kind of reduce the effect of that exchange rate. Another thing you might also want to examine is to check, are there other subscriptions? I mean, for startups, many of the mistakes that we see startups make is that they do a lot of subscriptions to different SaaS services. So, for example, they subscribe to Google Workspace, they subscribe to Microsoft Workspace, they subscribe to Slack, they subscribe to this, they subscribe to that. And at the end of the day, all of those things are not being put up to, they are not being used optimally. So it might be a high time to start reviewing those subscriptions. Which one are we still using? Which one are we not using? And then can we start looking at alternatives that are Naira and not necessarily USD or Euro or pounds, right? So, to cut it short, right, I will just stop at the fact that to manage stakeholders' expectation, you need to communicate with trend. So if USD was still supposed to be this amount, right, this is where we'll have been. But because USD is here, that's why we are here. That's one. Two, you also have to advise on short-term securities. Can we put some funds in short-term securities in order to get some profits? I mean, short-term I mean, Mayowa mentioning during the course of when he was explaining the different stages of the companies, right? Which is almost very, very clear that startups are most likely for their first few years meant to be loss-making one way or the other. But if the loss is excessive and not being controlled, then it becomes worrisome. So the last part is, how are you managing your treasury? So the money that you have do you have money in USD? Do you always convert every money that you have in USD to Naira? If that is the case, then you stop doing that. You only pick what you need. You only pick what you need. You only pick what you need. At any point in time that you need stuff, you only pick what you need. And then if there is a need to also renegotiate some contracts in terms of interest terms with your investors or with your direct stakeholders based on existing economic reality, you have to renegotiate. And I mean, that's just it from my end. Thank you very much.
Wow. Thank you so much, Owelabi. Thank you. Thank you so much.
Okay, you have the floor, sir.
Thanks so much, Mr. Kudus.
Well, sorry, if I may ask, is there any tax implications to when a company is having these exchange laws? Is it beneficial to entity or otherwise?
I mean, right now, until it becomes realized, the answer is no. right? It's just it's an expense. I mean, like what I said, to some extent, there are some times that it is allowable based on some certain tax laws, but most times it's not. But the only time I can think you can benefit from it is when it is realized.
Okay, in addition to what Mr. Koduza said, so as an accountant, as I've said, don't just look differential reporting just like that, they make a loss, right? So you have to do work back in CIT, corporate tax, add profit before tax, add back your depreciation, not cash item. And if you're estimating loss, that's what I ask, is it, you say it's net, right? You have to, which of the nets, is it realized or unrealized? You have to add back if it's realized, right? If you unrealized, you have to just look like at it as it is. If you had your depreciation, because I don't know, if your depreciation is so high as well, that will give you back. You have what they call taxable profit. You have your you have a taxable profit, then you move your capital allowance. I don't know if your company, if it's a manufacturing company, you have unrestricted capital allowance. And if it's not a manufacturing company, if it's an oil and gas, you have unrestricted capital allowance. But if it's just normal FMCG company, you have a restricted capital allowance of 60 to third. You less your capital allowance for the period. Then you have your taxable profit. Then you can have your probably 30% or 20% as the company. If it's a startup, probably 20%. I don't know what's your revenue. If it's up to $100 million, as you say, it's 1 billion. It's 1 billion. It's 30%. And as well, if you guys know for that, if it's still loss, you pay minimum tax. Minimum tax like 0.5% of your revenue, yeah, of your turnover, which is revenue. You still pay minimum tax. You like it or not, so you still have some tax implication. Oluwadamilola.
Thank you so much, and thank you, God bless.
Yes, thank you too for the question. Oluwadamilola, your hand is up, please.
Okay, I just as an undergraduate I am 200 level. So I have passion for auditing and taxation.
Okay.
I just wanted to ask, like, what are the things that I need to start doing to start like leveraging on this field, like enhancing more on this field? Because most of all what you said today is just like a new thing to me.
Yes.
I'm just trying to like grasp some things there. So I just want to like, okay, what are the things that can make the enhancement in this field that will enable me to like gain more insights, valuable knowledge, and all of that?
Okay, no problem. First and foremost, thank you for joining. I was not opportune to have this stage when I was still younger than this. When I was in school, I don't really join some. But thank you for joining, and for such, I'm going to reward you for your good work. You can send me your phone number. I will give you back your airtime that you spent listening to us here. That's one. Thank you for joining. And for what you ask, you can just start your ATS. I will advise that you start your ATS. It's very, very important. And it's good as now that you're going to start meeting people, your LinkedIn, start liking and leading people and connecting with people. And probably during your second semester holiday, you can reach out to you can reach out to Pep, you can reach out to Mr. Kudus if they have an intern opening for you to just like understand how real life work is, though what you study in school is you still use it in the outside world. However, you can use that probably your 3 months to do 1 or 2 things. You can do free intern, understand, so as to get more insight, and this will prepare you for a good job when you finish, right? So I started with an audit and tax firm, then I moved to a dreams.ng company in VI. From there, I moved to one FMCG company. Then I moved to tech company. Now I'm not oil and gas company. So, you can just start from anywhere, right? You just to advise that you can start from anywhere. But however, you can start from ATS. Start your ATS, and then that will give you, ATS means I can. That's for those that have not have their guess your probably ND and like. So can start from 8 years, your 8 years 1 to 3, and you can do your ICANN. And you can be fortunate to finish before you finish your school. If having an ICANN, that's a plus for you among your peers when you start looking when you in the labor market, right? And connecting with people, important people that can help your career. And joining this type of congregation, meeting Mr. Idris now, Mr. Idris can poke you to EY like that for NYSC. So that's just it. That's just the advice. Thank you so much.
All right, thank you very much, sir.
Send your phone number so I can return your airtime. Thank you.
All right, sir. Thank you, sir.
Yeah, please. Do you have any other question?
Samson has his hands up. So Samson, just unmute yourself and ask your question.
Okay, good afternoon, everyone. Good afternoon to the moderator. I really appreciate this session. I think I was able to pick a few things from this session. So the question I want to ask, during the presentation, you touched on startups, and that happened to be something that I currently have my hands in, myself and a group of friends. So we are currently working on a startup. But we have a few challenges, and of course, it's capital issue. So currently, there is no capital. It's more like an e-commerce sort of venture, and the way I see it, we can start with little or even no capital, because it's going to be at the starting phase. It's going to be like a sort of drop shipping. So we are just basically rolling over customers' funds and using that to generate profit and maybe run the business. Although from time to time we may need to commit personal funds, but at the moment I can't say we have any capital, right, for the venture, and we need to do some financing, like some expenses we need to pay. But the founder of the venture is looking at expansion, and in looking at expansion, there is this need for us to have a physical presence so that people know that we are here, and then we can have more trust and also a bit of command in the market, and then we can be looking at revenue and profit. But the challenge now is we don't have any capital, and the founder is looking at, okay, me being the finance guy, it's my responsibility to go and bring in the capital. But I'm telling them that not bad, right? I'm saying that for us to go and get equity from angel investors and all these venture capital firms, we need to also have committed something. So that is basically where my question is now coming in. So I am of the view and opinion that we need to commit something into this business, so that whoever is coming on board, we see that we are not just coming to tell them to come and bring money and finance our idea. We are also running the idea, and we also have something in the business which we are using to sort of sustain the business, and we are counting on them to help us, get to our new phase, which is the expansion process. So I don't know what your view is on this, and maybe you have any advice towards this. I feel like the right way to go is, first we need to commit some fund, maybe personal fund, into the business before having to approach an angel investor. So I don't know if this view is right, or maybe you have any opinion or advice towards it. So that's my first question. And the second one is talking about our expansion plan, right? We are looking at a total spending of about 9 million naira, because we are going to be renting, we are going to be getting renting, then renovating the store to make it up to standard, sort of, and buying some inventories into the store, as well as some furniture and fittings, which is going to cost us money. We're also looking at the possibility of logistics, having a logistics team, at least a bike for a start. So all of this costs money. So I tried to I did a sort of projection of what our expenses are going to look like the cost involved, and I displayed it to all the partners involved. But the catch here, or the challenge here, is I looked at the CAC document of the business, and the registered capital with CAC is just ₦1 million ordinary share, and there's nothing like authorized share capital. It's just ordinary share capital, which is ₦1 million. So I'm also looking at it that if we are going to be needing equity of about ₦9 million, are we not going to have issues when our CAC is saying that we can only have 1 million? So I don't know if you can probably enlighten me more on this issue.
Let me give answers to your questions.
Yeah.
Let me start with this. And don't categorize number of shares with amount, right? So you say 1 million shares. It's not 1 million shares, 1 million shares. As an accountant, you have to so the number of shares does not determine the amount you can get. Get that? No, know that. You can have 1 million shares and get over probably 200 million investment. It does not. It's not. It's just like, okay, we'll have probably 50% of the shares, or probably 80% of the shares. Right? It depends on the forecast of the organization. So as a startup, it's not much you must have spent your money before you get an investment, right? So you can engage some financial advisors on this. If you don't really have knowledge, as an accountant, it's so sweet that we don't need to have what you knowledge. If I need something now that's why it's good to network, right? Networking is very, very important. And that's why we are here, right? So networking is very important. If I need an advice regarding more of explanation regarding startup, Mr. Balukun Kudus has a lot of knowledge regarding investment, and okay, I can call Mr. Kudus. If I need more, I can call the head of the investment in public Lighthouse Investment. You understand? Because my guy, I can call someone from Capital, Stanbic IBTC Capital. I can call someone from Chapel U. Okay, I want to get this fund. I need $500 million. Me, I won't be doing. I can't even do $9 million. I want to do $500 million investment. Who are the investors? What are we going to look like? Now, what are you guys going to charge me? Because you don't need to bother your head. Sometimes you don't need to even give yourself a headache. But however, you guys need some money. It's very, very important. You're going to need some money, because you're going to pay all these guys that are going to use. Okay, you need someone that will help you to do your accounts. As an accountant, you don't have to do everything yourself. Get advisors. Maybe you're going to get in touch with Chapel Hill. Hi, Chapel Hill, I need your financial advice in this, and I want to get over 100 million naira. And how much you guys want to charge? You guys will be the one to look for the investors. You don't need to look for investors yourself, Mr. Samson. They can work for you, and they'll get their money. You understand? Okay. And most of these companies are ready to work with SMEs, because working with SMEs, they don't know how the growth you made in the next 2 years. And that's why EY was charging, my former organization was charging not up to 5 million for the audit, right? And EY that will charge me here, ordinary for one thing, can charge me where I am, can charge me over more than 200 million. So you'll be seeing the difference, right? It's still the same output, right? But because of it's an SME, and this is a big organization, so they want to charge you less. They may not even charge up to 3 million for their work, but they'll be one of the investors and say, okay, we are giving you 100 million, and they'll get the investor for a commercial paper for you guys. So you don't need to spend all your money to start the business. You can actually, if you can forecast well, if you know how to forecast well, and you understand the business well as an accountant, you tell them they have to do, even though you can't do forecast, they can help you do the forecast. It's for you just to review it with your CEO. Yeah. You understand? So that's just it. And if you need more advice regarding it, you can speak with Mr. Kudus, or speak with me, or any other person you can speak. But I'm sure you can just reach out to what is Finance House. Just send the mail to them. They can help you get investors. You don't need to bother your head.
Okay.
Yes.
Thank you. Yeah, but just to get clarity regarding the capital. So on the status report on the CAC document, it's 2,000 units of capital, ordinary share capital, at ₦1 each. So if we are getting if you are seeking equity which is more than what we have quoted in our CC document, will there be maybe need
That's
to
not
revise
quoted.
this
So
document?
let me give you advice. That's not quoted.
Okay.
Understand? So number of shares does not mean the company worth. You understand? That does not mean the company worth. Number of shares. But you know, it actually it depends on the way you are looking at it, right? So because you know, if I'm looking at high level as well, you understand, like company on NGS now, you understand, in that aspect, like that's why you know SMEs, you don't need to follow any protocol, right? For that SMEs, but for someone like my company now, Aradel, you understand, your number of shares really matters because you're and you know your number of shares really matters on the fact that and the amount of you're selling your shares. But you're not SMEs, you're not selling your shares, right?
Yes.
You don't have any valuation. Your valuation will speak on that, and that's why I say engage financial advisors. They'll help you with your company valuation. You don't need to even have an office before you have a valuation for your company. It depends on the revenue you intend to make, and you know the type of organization you intend to have in the next 2 years, and the forecast, the revenue, the profit, and the post tax, and all. So that really make. It depends on the way you're looking at it. There's P&E, there's a lot of way you can use valuation to get the valuation of the organization. So number of shares does not determine the valuation, but it also determines the valuation when you are selling shares, right? So it depends. So not as an SMEs, you know, in IFRS you see that IFRS for SME is different itself, you know. So and that's how the whole world sees an SME, right? So that's it. I don't know if Mr. Cruz have anything to say about this as well.
I think you've captured it well. So if it needs to fix, it might need to just reach out to financial advisors. Thank you.
Okay, all right. So thank you very much, Mr. Yandere, for your awesome presentation. Are you done?
Yes, Mr. Idris.
Okay, so thank you very much for honoring our invite. We appreciate your time. And thank you to everyone who had stayed till the very end of this engagement. We appreciate you all. And with that, we come to the end of this month's edition of the Finance Business Partners Meet and Chat session. We hope to see you all again when we would be having another professional come speak to us on another topic next month. Thank you very much once again.